Ladies and gentlemen, good day and welcome to the Aelea Commodities Limited H2 FY25 earnings conference call hosted by AKMIL Strategic Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Sahil Patil from AKMIL Strategic Advisors. Thank you, and over to you, Mr. Sahil.
Good afternoon and thank you. On behalf of AKMIL Strategic Advisors, I welcome you all to the conference call of Aelea Commodities Limited. From the management side, we have with us Mr. Josefa S. Javdawala, Chairman and Managing Director, Mr. Ashok Patel, CFO and Whole-Time Director, Mr. Satyanarayan Patro, Whole-Time Director, Ms. Divyani Vekiria, Company Secretary. Now I hand over the call to Mr. Josefa. Over to you, sir.
Good afternoon and thank you all of you for joining us today. It's a pleasure to share the progress and strategic directions of Aelea Commodities, a company at forefront of India agri-value chain transformation specializing in cashew processing, international agri-trade and allied commodities. Let me start with the industrial landscape and opportunity that we have. The global cashew market is witnessing sustained growth, driven by rising health consciousness, increasing demand for plant-based nutrition, and a strong consumption trends across the food and snack segments. India remains leading consumer and processor, yet the country depends heavily on the raw cashew nuts imported primarily from Africa. This creates a robust cross-border trade ecosystem with significant economic importance. Simultaneously, value-added processing, quality assurance, supply chain control are becoming key differentiators, opening up new opportunities in premium B2B segments, private labels, exports, and FMCG tie-ups. Aelea is strategically positioned to capture this opportunity. At Aelea, we are uniquely positioned to capitalize on this shift. Our strength lies in a fully integrated processing facility at Surat, which is additionally increased with 109,000 square feet. We now, as we speak, operate at 140 metric tons a day, and it is scalable infrastructure and a modern technology. Strong backward integration through direct ASEAN sourcing from the African origins, as well as forward integration in value-added products, is a key strategy for us. A premium domestic and international client portfolio, including the likes of premium snack brands like Haldiram, premium ice cream brands like Amul, Bikanerwala, Star Bazaar, Japson, Farmlay, Reliance, all of these contributes to our growth strategy. Let me come to the financials of FY25 and performance and the outlook. In FY25, we achieved a revenue of 182 crores with an EBITDA of 8 crores and a PAT of 1 crore. Despite working capital intensity inherent in the agri-commodity trading, this reflects our operational discipline and growing market traction. As India's organized food retail and snack segment expands, the global buyer seeks reliable, high-quality supply chains. Aelea stands to benefit immensely. We are focused on enhancing our sourcing networks, entering new export markets, and deepening the relationships with food majors and private label partners. I would now like to open the question from any of the investors, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star then 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, to register for a question, please press star then 1. Our first question comes from the line of Prabal Jain from SM Holdings. Please go ahead.
Hello. Hi. Am I audible?
Yes.
Yeah. Hi. So, sir, first, I have a couple of questions. So first, I think you recently commissioned your 140 TPD total capacity. So if you can give us an idea of like how you are planning to scale it up, what type of capacity utilization we can see in FY26 and going ahead, and when can you reach the peak capacity, and are you sufficiently funded for working capital to reach that optimum capacity?
Okay. Let me take your first question later and the later question first. So for your later question is working capital. Yes, we have aligned ourselves for the working capital requirements. We have major multinational and international bankers in our portfolio. Along with that, we have India's premium first-class private lenders that we have associated with. The second part is on the capacity utilization. As we have already informed in the exchange that we have commissioned in the end of May the entire plant. As of now, we are ramping up, and it takes roughly 15 to 20 days to come to the complete utilization of the capacity. At 140, we are very clear that by July first week, we should be working at 140 metric ton capacity. That is basically the rated normal capacity that we will be working at.
Oh, wow. So, just trying to understand more here, sir. Since you'll be directly going from 40 to 140, so, I mean, the output, do you have confirmed orders for such high level of produce that you'll be having, or would that be stored as an inventory for now and would be gradually sold off?
Typically, we never had a problem of sales. Let me put it this way. The advantage with Aelea has always been that, we have been dealing with the right kind of buyers and across the segment buyers. Let me just put it in a different perspective. Cashew is a very versatile nut compared to any other nut. We eat it as snacks. We have it as in ice creams. We do have it in sweets, and we do have it in gravies. So if the summers are peak, then you have a lot of ice creams that puts the consumption more. And we do have customers of that class as well. If we have festivities, then the sweet consumption increases, and we do have customers of that category as well. And snacking is a regular option. It increases during the Diwali season and all. The people would look at coming up from July, the middle wholesales and bulk wholesalers to put in the inventory at their level. So we do not see a challenge on sales side. Yeah, the trajectory is different right now because, the inventory, the price from a commodity perspective is on a downward trajectory. And it will slightly caution the supply chain altogether, but it doesn't affect us purely because we are always into back-to-back trade.
Okay. Noted. Sir, another part which I wanted to understand is about your entire supply chain because because you, I think 100% import your raw materials from Africa and then you sort of process it, then you sell it here. So wanted to understand what are the typical ways, how do we look at your end-to-end supply chain, in terms of the variation of cashew prices and what type of contracts do you have with your suppliers from Africa? And what factors is your supply chain, dependent to?
See, there are three primary models of buying the...
And also payment terms, if you can help me with, end-to-end payment terms of right from your suppliers to when you receive from your end customer. Sorry to interrupt, yeah.
Sure. So there are three ways of buying raw cashew nuts, except for the fact that, you buy the local cashew as well, because around 40% of the India's overall raw cashew nut demand is met by the local crop. So 60% I'm talking about right now. On the 60%, you have three models which you can buy from. One model is that you buy purely when the ship has just sailed from the origin, and you put your working capital in the entire transit as well as clearance, and then you come and process it. Second model is that you buy near to the arrival at the port, and you buy it from an intermediate trader. And the third model is basically after the landing that you buy. Now, it's a very delicate balance that we follow here. One is that how much you need to process. Second is when do you buy and how much the working capital cycle will increase from. And what is the sales side of it? Because we do not want to buy unless we are covered our sales for the additional quantity. So we always look at a replacement logic rather than anything beyond. We don't buy ahead and keep it, or we don't sell ahead and keep it. It's always back to back. And between the three models, supply is always available. Now, this also covers the payment terms, because as soon as you buy and the documents are in your name, the payment needs to be made. And in some other cases, yes, you also enjoy the credit from the suppliers up to 90 days.
Okay. And then once you have the kernel, so I mean, typically you process it and you give. So, what kind of payment cycles you get from your customers? I'm talking about let's say top 60-70% of the revenue.
Again, the top 60-70% of our revenue comes from general trade, where there is no cash credit terms with them. It's a cash and carry model that we work with. When it comes to institution, the modern trade, and what you call as brands, typically, they have a credit period anywhere between 3 days to 10 days to up to 30 days as well.
30 days is the maximum, as I understand.
Yes.
Also, sir, if I look at your financials right now, so typically in this H2, I think the cost of materials, as in your raw materials, I think you must have stocked up a lot owing to the coming huge capacity expansion that you did. So, is it fair to assume that for H1 FY26, you are adequately stocked in terms of your raw material?
So as of March 25, we were not adequately stocked because we had just started increasing our inventory. The inventory level is right now at 50% of what we desire. This is the time when we really buy inventory to the level that we need as a base inventory. What we call as a base inventory is what we need. So that will still continue to increase the base inventory. And then anything beyond that, we will keep buying on a replacement logic.
Okay, but sir, what I'm trying to understand is, if I compare last 3 half-yearly trends of yours, you're ballpark doing 85 to 90 crores of top line on a raw material of approximately 30 crores you did for last, FY24. 33 crores, but now it has jumped to 77 crores, and that has yielded you a top line of 95 crores.
No, there is a difference between a top line and the balance sheet number. Balance sheet number is always on date, and a top line is for the entire year.
I'm looking at your income statement only. So, in other words, my question is, why did we face the margin pressure this half yearly? Because So if you can throw some light on that, why did you
I'll
face the huge margin pressure?
I'll give you a different way. Okay. If you keep it as a business as usual, then we would have never gone for such kind of an inventory. What has happened between the last few months of the financial year is that we have now started building up inventory for the revised capacity. The revised capacity is more than 3x of the old capacity. Now, if you multiply any number of inventory with the 3.5x, then you will probably get the answer.
So that is what I'm asking, sir. So let's say you have pre-stocked the raw material, right?
Yeah.
You have pre-stocked the raw material in hope of a bigger capacity. But what I'm saying is that you have recorded all of it in your P&L in the half year, in the category cost of material consumed. But for that proportionate, the revenue has not been recognized.
No. Cost of material consumed has nothing to do with the inventory in the balance sheet. Cost of material consumed has gone up. That is because of the reason that, the price at which the material is coming right now is on a higher side compared to the last year.
Okay. I think I'll come back on this front. Another question, sir, I wanted to check was that whatever that biofuels and all those kind of products you are developing, that will be totally produced from the waste of this cashew processing, right?
Yes.
Okay.
Yeah, you're right.
So that CNSL product, that capacity, is that live or is that something that we'll be looking up in FY26?
So, as we last said, we are looking at something, the phase 1 is completed, which is basically enhancing the processing capacity of the cashew. The phase 2 is basically to come up with the oil capacity. The oil capacity, because of the delay that we had in the first phase 1, we are now faced with rains, and we would be starting it post rains. And that will, we are trying to expedite that and complete it before FY26 closing.
Great. So final question, because now you are ramping up the capacity and all those things. So what kind of guidance would you like to give for FY26 and going ahead?
See, it's a very simple way. Again, from a top line perspective, it's not under our control because the price of a commodity is never that you can predict with. Be very honest about. But as a processor, we are always about having our margins in the processing capacity. Yes, you have a certain time in a phase there where the margins can be negative also, purely because you are doing a significant jump in the business, and that's what has happened in the last H2 of the financial year that we closed. So
okay, your raw material spike, is it?
Yeah. So what we are looking at is in somewhere starting July to ensuring that the capacity is completely utilized, and we continue to enjoy on the standardized rate roughly 12 to 13% margins. That's what you have seen in FY24.
Okay, great. So in this part, okay, fine. So now you're ramping up the capacity and you are at a working capital intensive kind of a setup, and I see you'll also be expanding this biofuels kind of a setup. So are you looking at any fundraise in FY26 in the near term? If yes, what kind of fundraise are you planning? Like equity, debt?
No, we do not see any fundraise requirements. Honestly, from an equity perspective, the company is well funded. From a debt perspective, again, we have already planned for FY26 and we have already aligned ourselves from that perspective. See, we are in a very different trajectory. We can let's say compare it with a sprinter and a marathon runner. Today we want to run a marathon. We do not want to do a sprint. Now, do we have a completely integrated company that processes cashews, does the oil, does the additional products? Answer is in negative in India. And that takes time from a lender's perspective also to really understand and come to the business, let alone the investors or equity shareholders as well. So we are taking that step, and as I said, like we need to first complete the phase 1, run the phase 1, show that performance, go to the phase 2, show that performance, and then go to the phase 3. So that is how we are planning it.
Okay. Great. So all the best. I'll come back in the queue. Yeah.
Thank you.
Thank you. Participants, you may press star then 1 to ask a question. Our next question comes from the line of Hemal Shah from Blue Rock Investment. Please go ahead.
Hi, sir. This is Hemang Shah, sir. Sir, my first question is that for how many days the facility will be operating on a yearly basis?
So on a standard, we take roughly 240 days in our calculations. You have 62 days of Sundays that we do not operate at, and then the rest of the things is taken as annual holidays, or rather official holidays and the holidays that typically goes out.
Okay, sir. So seeing that you will be working for 250 days and seeing with your margins at 12 to 30%, so according to my calculation, so on the yearly basis, can we achieve the operating profit of around 65 to 70 crores? Am I right on this, sir?
See, I'll not try to give you a number on the profitability, but yeah, your calculations are based on the pricing is more or less in the right direction.
Okay, got it, sir. Thank you very much.
Thank you. A reminder to all the participants, you may press star then 1 to ask a question. The next question comes from Manish Bhatia, an investor. Please go ahead.
Hi, sir. Am I audible?
Yeah, Manish. Please go ahead.
Sir, I attended one of your presentations with the Tiger Assets, where you explained about your business. The expectation for this year was somewhere around 20 crore rupees profit. Yes. And I know things have changed. So I would like to know what has changed that from a profit that we were expecting for 20 crore for the whole year, we have not been able to, even achieve 50% of that. So can you please explain what went, against the wind, or what exactly happened during that time?
Right. So see, the number that we are talking about is on the projection side was basis the fact that we would be able to complete our expansion within the month of December 24.
Yes.
We were significantly delayed due to certain approvals required from the government departments, and that delay has delayed the project, and we completed in 2 phases. The phase 1, which is basically after the shelled kernels, which was completed in the first week of February, and the phase 2, which was completed by the end of May 25. Now, that is the big differentiator, purely because, the numbers the profits that we were supposed to get for the last 4 months has never come in. Second part of this is that because there was a gap between these 2 phases, we had to run the part plant on the intermediate product, which is called the shelled kernels, which is typically the skin cashew that we know, and we get it from the market. That at our capacity, you can't find a lot of people that can service you. In fact, with all multiple people that we were able to gather, we still could not completely utilize the part facility that was available, even up to 50% capacity. So you can imagine that, the kind of scale that we have now. It also adds to the fact that the cost of these small players are significantly high compared to what cost at which we operate, and that squeezes the margins at our levels. So it's about, you can't have the people sitting idle. You have to utilize it, and that's the reason why, because this is a big gap. It's an exceptional thing which has happened, unfortunately.
Okay. So, are we expecting any pressure on the margins in the coming half year as well, or we are good to go from this half year onwards?
We do not expect anything significantly different from what we have been telling you right now.
Oh, got it. Thank you. That's all from my side.
Okay.
Thank you. The next question comes from the line of Varun Agarwal from Networthy Financial Services. Please go ahead.
Hi, thanks for the opportunity. So based on the capacities that we just discussed, if everything goes well, 9 months if we operate at 140 metric tons capacity, for the full year, can we do a volume of about 27,000 metric tons?
Yeah, you have calculated rightly.
Okay. And as of now, post the fluctuation in the raw material prices, as of now, approximately how much is the realization per metric ton?
Right now, see, we just started with the full capacity, so
Right.
it's too early to say. It's just 10 days, less than 10 days that we have started with the full capacity. But we do not see any difference between what we were making before and now. It will be on a positive side, but I don't see adverse stuff.
No, I'm not linked to the capacity utilization. In general, what is the realization per metric ton as of now?
So everybody will have a different realization. Okay. For us, if you really see, there are, let me categorize it in 3 sections of the market right now. Okay. From March, April, and May, the lower section basically of the processors, which is less than 10 tons per day capacity, a majority of them have shut down and closed the business for the last 3 months. They are expected to continue this way for the month of June also. It is purely because the trend of the inventory is on the downward side and the margins are under pressure for them because their cost of production is high. The second category, which is basically around 10 tons to, let's say, around 40-50 tons kind of a capacity, for them, they are running around break even, and they are still running. But anybody who is above 50 tons is running profitably.
Okay.
Yeah. So this is a time when, the inventory, this is once in 5 years kind of a situation where, the market do correct steeply, and in anticipation of further corrections, the entire value chains shrink, as well as people start to defer their purchases.
Understood. So if I put it in a different way, let's say H2 we have ended. So in H2, what was our average realization per ton?
In terms of top line?
Yeah, the sale price per ton or realization per ton.
Sales price per
Just a ballpark.
Sales price per ton, again, we calculate basis on the RCN level, raw cashew nut input level. So realization would be in range of 125 to 126 rupee per kilo.
Okay. And we had some impact of the bad debts which were written off. Going forward, do we also have some write-offs which can happen in FY26?
So if you would have read our prospectus, there was a company called Satpura Sahakar sugar factory. We had a 7.55 crores in total that was receivable from them. We during the year close by, we had received 1 crore 5 lakh rupees from them. But since it took that year and we moved forward, till the closure, we could not recover the money. As a prudent norm, we took ourselves saying that, okay, let's take a provision on that amount.
No, I'm asking whether we plan to create any further provision this year also.
We do not expect any provision. From a case perspective, we are very strongly to recover this money back. So this provision may get reversed as well.
Okay. And is there any way where we can do some hedging to protect against this raw material volatility?
No, there is no electronic hedging available. The way we do it basically is that we once we have reached to our base inventory, then we basically continue buying basis of how much we sell. So it's a replacement logic. So that's the way we work.
So what I understand is whatever inventory loss has happened, that has happened for the base inventory, because above that you are doing back-to-back orders.
Yeah, it's an exceptional thing because we have increased we are trying to increase 3.5 times,
Yeah, your base has gone bigger now.
Yeah.
And I've understood the debtors part. Going forward, how much is that base inventory which you want to maintain? Any ballpark number?
Ideally, it will be around 75 to 80 days of production. That will be in between the raw material, the intermediate product, and the finished goods. Finished goods, hardly we keep it, but 7 to 10 days. But intermediate is a big inventory, which is WIP kind of a situation.
And how much would be our capex spend for this year, FY26?
This will be phase 2 that we have already given. 12 crores is the estimate.
Okay, and how do you see the raw material trend in this year? What is your thinking?
It is in a corrective trajectory right now. Raw materials are, as I said, that is the reason why a lot of people have kept their small timers have kept their factories as closed as well.
So you see that already bottomed out, or there can be further downside?
Oh no, there can be further downside, but it may not be very significant now because you are sitting in month of June, and from July, the people starts buying for the festivities. Yeah,
Diwali. Yes.
Yeah.
So it is near to bottom, if not bottom.
Yeah.
Okay, just one last question. This drop which we have seen this year, looking at the last history of 5-10 years, is this level of raw material one of the least, or how is it? I mean, I don't, just an overall perspective.
I did not get your question only.
Suppose we leave aside this year, last 5-10 years trend as you've been into this industry, this drop in raw material is one of the steepest drops, or this is pretty common every year?
No, it happens. See, every 5 years you will have something, and it is very common for a lot of commodities, be it any food commodity, or rather than forget about any food commodity, but be it any metal or any stuff. It has its trend of uprise and downside thing, and this is basically a nature of this commodity as well. So the year when you have, but you have to understand this is a very different commodity. This is a tree nut. A tree is planted and then it gives fruits for next 40 years. So one year, if the tree has not given enough fruits, the next year the situation will not be the same. Okay, so it does happen every 4-5 years that a year will come when the tree has not performed to give the same amount of fruits, and that's the reason why the demand is more and the supply is less. And the year when it normalizes, okay, it corrects to the normal level, and the year when it has a bumper, it will further correct as well. So you will have that three angles to manage.
Okay.
And as I said previously, that we do not try to gauge ourselves as to what is the situation, but we try to remain as near to our selling and with the buying, and the buying to the selling.
Got it. Thank you for hosting the call, and wish you all the best.
Thank you.
Thank you. The next question comes from Siddharth Gandhi, an investor. Please go ahead.
Hello, sir. Firstly, congratulations on the commissioning of the plant.
Thank you.
My question was regarding again the H2 that we had, right? So the capacity expansion happened completed now in May, isn't it?
Yes.
So so how was the gross margins impacted? Because I believe we would do like either the hedging or we would have like pass-through mechanisms in place, So aren't we, let's say, hedge because of the commodity prices fall or increase? Is that not in case?
So I'll tell you what. There are two ways of expansion. One is that basically we have a extension unit. So basically saying that you had a 40 metric ton one line, and you now have an entire 100 metric ton new line. There's one way of doing that. The other way of doing that is basically having an amalgamated expansion, which basically says you have changes done in the entire unit and they synchronize each cells. So you have completely 140 metric ton, one line which is doing an action up till a certain level, and then you have another section which is doing the activities from the next level. We went for an amalgamated approach purely from a longer term perspective because we wanted to get into value added products and etc. And in that situation, we were delayed. Now the delay happened in two stages. The later part of the processing got completed in the month of February. And the initial part of the processing, which is the cooking and etc., got completed very recently. Because the earlier part, the first part of the processing, which is the cooking and shelling, was not completed, we were to buy from intermediaries, which is basically processors also, and then process it further. And that actually impacts significantly to your margins. Further that, the scale, that size at which we operate, we could not get even processors to provide us with the intermediate product because, you are a very significant scale that we operate at. And add to this that, the market since, as I said previously, that from the March, April, May, even up till June for now, up till 14th of June, some areas, have kept the factories shut down because for these small processors, it is not viable in the downward trajectory of the commodity prices.
Right. So even in the H2, we expect like at least half the H2 we will have that same impact that we had in the half of the H1 we will have the same impact that we had in the last year H2.
So we would have the impact till the May. Yes, we would have some impact till May. But now that we have complete processing available to us, we are in our own trajectory. We don't need to really depend on the intermediaries for now.
Got it. Just to sum up, so basically because we had to rely on someone else, we had to incur this additional cost. And now
Yes.
that problem seems to have solved. Okay.
Yes.
And sir, one more question. What was the sales price per ton for the first half of 2024? Because you mentioned 125 for the second half, I think. What was it? The first half, if you can recall.
It was around 98 to 99 rupees.
Okay. It's a good jump. Okay.
Yeah.
Got it. Got it, sir. And I think you mentioned this 12 to 13% margin. That's on the RC and
Yes.
processing, right?
Yes.
And
Yes.
we also have this trading business. How big do you expect that going forward? So one is the cashew processing, one is the agro commodity trading, right? What would
Yeah.
be the share of that?
See, trading side of it, we are not into trading per se. The way we do this is purely to keep ourselves aware and to engage in the products that we look at from a future perspective. The future pipeline of the products, food products that we want to go into processing for. They may be on a standalone being taken care of, or it may have some value of integration with the existing cashew business as well.
Right.
So we do not really have a guidance per se on this, because we really don't aspire to do too much of trade.
Got it. Got it. Okay. Okay, sir. That's it. Thank you so much.
Okay.
Thank you. Your next follow-up question comes from Prabal Jain from SM Holdings. Please go ahead.
Yeah. Hi, sir.
Hi, Devan.
I'm audible?
Yeah.
Yes. So, sir, I wanted to understand your plans regarding the non-cashew vertical of yours. Like, cashew is fine, you have a good capacity, you will start doing the work ramping up. But what about that? The other vertical, you plan on introducing some innovative biofuels, right?
Yes. As I already said before in the call, that we intend to post this rains, we intend to start the construction of phase 2. We want to expedite this and try to close it in the financial year FY26 itself. Post the phase 2 is completed, then we will go for the phase 3.
So phase 3 is the phase for which you recently purchased the land, I think 1 month back or so?
Yes, that's right.
Okay. And if you can throw some light on the kind of revenue potential we have from this biofuels, based on the kind of capacity you are putting in FY26, how much contribution can we see?
It won't. The value-added products will not be a very significant increase in the top line, but what it actually does is adds bottom line in a big way. This is a different, as I said previously, you have to basically look at as a sprint and a marathon, and then the same thing that I am trying to tell you right now is something which we need to make our lenders as well and understand that why when you integrate things is that your working capital cycle goes for a toss. Basically, your working capital cycle will increase because you are doing a job of otherwise 3 or 4 companies all together to make it more efficient for you. And that's the opportunity that we are looking at from a scale perspective. Just I want to reiterate the fact that, the 4 principles on which we work is that, we should be capital efficient, we should be logistically efficient, we should be deeper in the value chain, and we should have preferential access. And that's the reason why, 3 key reasons why these all are so strongly correlated in the strategy for the cashew business that we have, that we need to do this integratedly. So the bottom line is big number in this case rather than the top line. Again, I would not like to give you a future looking statement, so I can just guide you to that.
No issues, sir. Just wanted to understand more on the kind of products you are planning to produce. So from the cashew kernel waste, you are planning to produce a series of products. So, I mean, are there any incumbent players in India, like previously what you were doing? Were you selling off these waste which will now be utilizing to some other players? Are there such players?
Yes, they are. So a lot of people have a different way of working. Some people do buy the cashew shell, process the oil, that oil is processed further by someone else into their products. But there are some unique that we have. The unique that we have is basically that conversion of that oil into biodiesel and conversion of that de-oiled cake into a high calorific value charcoal. That's our uniqueness. From a process perspective, what is unique for us is basically that entire process is done in a single pass. You put input and the output comes out at one straight. You do not have to go through a multiple processes or other multiple activities. That's the uniqueness that we have.
Okay. And so just along the same lines, if I try to understand, since you'll be producing these previously it used to discard as waste, you'll be producing this now, and it's going to be bottom line effective, right? We are going to see not in the immediate future, but maybe 1 to 3 years down the line, we are going to see your profit margins expand from here, right?
Right.
And this 12 crores provision which you did last year, how you said that we are trying to get it back. How confident you are of recovering this amount in H1?
It is not 12 crores. It was 6.5 crores, which is as of March outstanding. See, we are confident purely because we are the debtor here has significant assets available for in case we have to go for liquidations of the assets. And secondly, that we do not have any ambiguity in our debt. It is well, acknowledged by the fact that by the High Court as well and by the debtor as well that it needs to be paid. So there is no ambiguity in our debt outstanding, and there is significant assets available with the debtor. It's all about how much the pressure that it gets created on the debtor.
Okay, noted. And sir, one last question. Have you explored any, since you are going into a waste to fuel recycling and sustainability kind of thing, any EPR credits or any EPR sort of a revenue potential do you have potential going down the road?
Brother, you have hit the low point for me. Honestly,
so you don't have it.
Honestly, it's unfortunate for us right now that we do not have an active carbon credit market in India. This our entire strategy is about being sustainable. That's basically at the core of us. And if we really evaluate what we are doing, and there is availability of carbon credit, it is a very big opportunity for us, honestly. But again, as of now, it doesn't exist. The government is doing its part in reviving this carbon credit market. We are hopeful that someday we will have this carbon credit market available to us in India, and then that's where we will be able to encash the advantage there.
Okay, great. And just now on the con call, I heard someone mention about value-added products. So is there anything what kind of VAP products are you looking at, like maybe packaging of cashews only or something else like?
See, I'll tell you, the way we see cashew is not only as the cashew that we know that we eat. We cover the entire value chain into the 4 segments that we have, which is the feed, food, fuel, and fertility. Now, each part of the seed has to be covered under different aspects. Now, let's say we talk only about cashew on a food side of it. So we are already processing cashews right now. We are looking at, you already probably have seen flavored cashews in the market that is also available. But we are going for value-added products like a choco spread, like a kind of a milkmaid, which is all these products are basically vegan, and the vegan is increasingly the way people are consuming it. and making it more healthier as well. So for people like lactose tolerance guys, allowing them to really have that in a healthy form. So these are products which are under pipeline. It should be soon launched. What kind of market we will be able to capture right now, it's too early for us to give you any kind of an understanding on that, because it's basically the initial steps, because we are the ones which basically are the first movers.
Great. Congratulations. All the best. Yeah.
Thank you. The next question comes from Dinesh Kulkarni from Finsight. Please go ahead.
Hello, sir. Am I audible?
Yeah, Dinesh.
Yes. Sir, actually, I may joined a few minutes late, so may have missed it because you might have already discussed this. I know currently, a lot of things are happening in the company and, projects and stuff like that. Will it be possible for you to give, 3 years from now, where do you see in terms of revenue, margins and capex for the company, with the current projects in pipeline?
See, honestly, again, guidance is something which right now, or numbers is something which right now I would not like to give. But for next 3 years, our focus is not going to be beyond adding value-added activities. The phase 1, which we have already informed about, is commissioned. We are going to continue to process at phase 1. The year of FY26 will be about completion of phase 2 of the project, which is about the first level of extraction of oil, and then the phase 3, which is about value added like biofuel and charcoal. So it will be 3 years. Our focus is not about making it too much of top line, but to be very healthy margin player. That is the key focus.
Yeah, because I see the reason for asking this question is, so if you compare it with last year and the current year, there is no revenue I can see from rice and other commodities, right? Agro commodities, it's literally zero.
Yes.
So definitely you have taken a diversion into the growth which you believe coming up in the next few years, right? So
Yes.
how do we see, as an investor, to where the company will be? Like, say, what's your expectation from these new projects? Maybe you can give some rough numbers either in terms of projections.
I told you that
Yep.
the trading is about a future pipeline, and we see that from a continuous growth perspective. So, it's something beyond 3 years, for sure. That we look at all these commodities, food commodities again, that we would be entering into after we complete the cashew value chain. And as I've already mentioned, for next 3 years, we do not see again any kind of a capital raising activities and all those stuff, purely because we are confident enough of the internal accruals able to meet all the capex requirements. So answer your question, and again in a repeated form, is that the trading activity is only about after the 3 years that we could say, okay, this is a product which the next value chain will be from.
Okay, sounds good. So are you seeing any competition coming up in the cashew segment?
It's a very, I would say there are more than 2,500 processors in India who processes cashew. Okay. Whether you can become a competition or not, we really don't know. But we do have players who are in a range of 50 to even 140 metric tons capacity. Now, tomorrow, if that person really wants to raise the capacity, will it be in a direct competition? Probably no, because we do not have we are not even a big market share player. At our capacity, we would be less than 3% of the market share. And if we really want to aspire, we basically rather increase our market share than getting into a competition mode. And again, each one will need to look at how really it competes. We look at a deeper value chain with innovative products and well research and developed value-added streams. So, as I said again, that if you have a deep margin, then probably you may end up playing the competition games as well. But again, I don't see that really happening because it has not happened for last 15, 20 years. We never know that it will never happen. Okay. So
Yeah. That sounds great, sir. Thank you very much and all the best.
thank you.
Thank you. Our next question comes from the line of Sahil Raj from Samdarya Capital Ventures. Please go ahead.
Yes, sir. Am I audible?
Yeah.
Sir, I wanted to ask whether the company and its officials have any internal discussions to maybe release quarterly updates or one-pager summaries.
We are striving towards engaging with the investors on a much frequent intervals, honestly. As of now, the quarterly updates is under consideration. We haven't finalized it.
Okay, sir. And the banks that you have mentioned are ready to provide you working capital limits. So at what rates are those limits? Are those favorable to us than earlier times or maybe something in between?
Yes. Yes, it is favorable, definitely, because, now, since last 1 year, we have been listed, we are well capitalized, we have significantly increased our assets. So definitely the bank appreciates that fact, and the rates are also favorable.
Anything on the current limits, working capital limits that the banks have sanctioned?
It is sufficient enough for us to look at FY26 entire working capital requirement. That's already something which I've already communicated. We have a just to give you again back, we have a pool of multinational banks with us, as well as top class private lenders in India. We are also you can see our debt profile from CRISIL as well. We are already rated as BBB stable.
Yes. All right, sir. Those are my questions. Thank you.
Thank you.
Thank you. Next question comes from Nikesh Saria, an investor. Please go ahead.
Hello.
Yeah.
The realizations, did you say the realization of 125 to 127%? Is that correct?
Yes, that's for H2.
Okay.
Nikesh, do you have any further questions?
Yeah, I'm speaking.
Yes, sir.
Yes, assuming the level, and I know you don't want to speak.
I'm really sorry to interrupt. Sir, we were losing your audio. Could you please repeat your question?
Hello. Am I audible now? Hello. Hello.
Yes, sir. Please go ahead. Nikesh, sir, we are not able to hear you.
Hello.
Yes, sir.
Yeah, assuming our margins normalize on an FY24 base and our capacities are also going up by 3.5x. So theoretically, can our bottom line also go up by that much?
It is again on the capacity utilization basis that we make margins. So I'm not sure how are you looking at the bottom line per se. If we are definitely having an additional capacity at 3.5x, yes, we will have an absolute value of profitability that will also be in a similar trajectory.
Okay. Thank you.
Thank you. Our next question comes from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello. Am I audible?
Yeah.
Hello. Yeah, so just one clarification. One of the previous participants asked you if we could have operating profits around the 6.5 to 7 crores. Is that what I heard right?
No, I don't know exactly your question.
So I think a previous participant mentioned that we'll have operating profits in the range of 65 to 70 crores. Is that for FY26? Could we take that assumption?
See, again, I'll not like to comment on that number per se, but the trajectory as he's worked out is right, because he worked out the top line as well as on the percentage basis the bottom line. So the trajectory is on the right levels.
Okay, and our trading business will have around the same contribution to the revenue, or will it go a bit lower from now?
No, percentage-wise, it won't be the same. We do not intend to really do trading activity. It is, as I said again, it is only from to be engaged in the activities where we are in future looking to enter into the food processing side of it.
Mm-hmm. Okay. So it'll go down to maybe like a 10 to 15% for a second.
Yes. Yes.
Oh, okay. That is it from my side. Thank you.
Thank you.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. I now hand the conference over to Mr. Sahil Patil for closing comments.
Thank you everyone for joining the conference call of Aelea Commodities Limited. If you have any queries, please feel free to write to us at info@akmiladvisors.com. Once again, thank you all for joining the call.
Thank you. On behalf of AKMIL Strategic Advisors, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.